Good morning, traders and investors. Welcome to Thursday's edition of Benzinga's Pre-Market Prep, brought to you by the good people at Options House. Mighty Joe Young, I decided I'm going to be nice to you today. How you doing?
Oh, that's so nice of you, Joel. I really appreciate that. You're just happy because you're getting out of here tomorrow for a little National Lampoon's Vegas vacation, aren't you?
I am. I'm just thinking about that 60-degree, 65-degree weather and the 80-degree turnaround from here. And I'm going to be running around in my swimsuit, man, in that kind of weather. It
You're
should,
still going to freeze your you-know-what's off at night. It gets cold in the desert, my
hey,
friend.
I'll have my Michigan fleece on and I'll be fine.
So,
So,
fortunately, though, today Fari Hamzei is our guest at 8:35. He's going to teach us how to pay for that expensive Chicago soup, which you might need after running around in the cold in your bathing suit to
yeah.
make you feel better. And then at 9 a.m., we've got Steve Spencer of SMB
Wow.
Capital, who will be sharing with us some of his insights and his educational background and career. So definitely stay tuned for that.
Yes, move over CNBC. I think we have a much better guest and much better special co-host guest today. Once again,
I know I'm here
no,
every day
yeah,
though, Joel. I
Joe.
mean, but wait, I have to give a little teaser though because we have a very special guest next week, right for when you come back from Vegas, if you make it back. And it's a very, very lovely young woman who will be on the show next Thursday. So be sure that all of you out there listening will be on here.
I
You're
don't
gonna
want you
love
guys
this one.
googling her and not paying attention to the show.
No, Joel. Do as I. You'll tell him. Do as I say, not as I do, because you'll be the one googling this poor girl the whole time. So don't worry. We're also looking into getting some other great guests. Talented blonde, perhaps. Kristen Bentz will be coming on soon. But that's not who's on next week. Just stay tuned for next week.
Oh, a little bit of a teaser, huh? I mean, what's happening is all these chicks are looking at my profile picture and they're clamoring to
And they're
come on.
not calling me back.
They're coming on the show.
They're going,
All
I know that
right.
guy. I saw him on MSNBC.
All right, let's get to Kyle the Snazzy Bazzy over there. Kyle, how you doing?
Good morning, guys. Pre-market traders and early risers. What's going on, Joel?
S&Ps are down, down,
Down,
down.
down, down.
Yeah. And what level? I want you all to chime in at the same time. Brent, are you ready? What level are we focusing on?
1840. I'm the only one. 1846.
I,
What the heck?
I think Brent is like doing a little like a penny thing, and every time I say 1846, he's dropping a penny in the jar. And what's the pre-market high? 1847.
Oh,
Ooh, confluence they call it, and we broke down to 1832.75. So we're bouncing back a little bit here. Looking at the support levels, we need to hold in right here. 18.37 was Monday and Tuesday's lows, at least the intraday low on Monday. Wednesday's low 1838. So now my important number, super important number, is still 1846, but now 1838 becomes a really good number to keep an eye on. Also, if not, we could be falling all the way down below Monday's low, perhaps getting down as low as 1820 today. Kyle, does that scare you at all? You gonna go out and buy some weekly puts or something?
I'm buying some weekly puts. That's for sure. That
Okay.
1846 doesn't hold. It's all you've been preaching into me.
Okay, good. You're listening, not like some of these knuckleheads over here.
Well, up on the morning agenda, we always go over the SPOOs. How about we get some gold in there too, Joel?
Gold is holding up. I think it's that whole Ukrainian situation. It's just, people are worried about, like what if like Russia, goes into, sends their army over there and stuff. That's going to create some chaos. So gold is hanging in there, not really giving back a lot of the gains that it's had over the last few days. Trading up $2 here in the pre-market, or I guess it's really open. Opened at 1330. Excuse me, 1329.50. Made a high 1334. Just hanging up here at 1330.10. The high of the move is way up there at 1345 from yesterday. I don't think we're going to see that. Let's just keep an eye on that low because the 24 even low coincides with yesterday's low at 2230. $8 away from there. Good to go. Gold, good to go north. We hold that 1322.30.
Now we got Yellen's testimony speaking at 10 a.m. Eastern time. So all these levels are going to be really important leading up to that. But let's also cover crude here, Joel.
Yeah, taking it to crude market. Boy, running into a mound of resistance up here, and stop shy of the 103 level. Hit a high at 102.90 yesterday. Previous day session 102.84. Got as low as 102.19 here, but we're battling back here. So still leading to the short side until we clear that 103. Target if we take out that 102.19 low on the downside. 101.58 was yesterday's low.
Earnings from
Er,
Wednesday night. Oh, I can't wait to go over this one. Back to the retail. Looking at my boys at JCP reported 68 cents to the down versus the Wall Street estimate of 76 cents. 2 billion in year-end revs. Q1 comps up 3.5% rev estimates. Looking at 3.94 versus 3.78. Joel, is JCP up, down,
Oh
sideways?
yeah, it's trading up huge, huge, as my buddy from New York was saying. You know, New Yorkers don't pronounce H's like they say huge.
Oh, it was so we were when I was in New York last week. It was incredible to hear the different language that they speak.
Yeah.
It's all different, huge, and the F word seems to be like they're taught that in elementary school.
Do they say best in the city a lot?
Best in the city? I didn't hear that one.
Oh yeah, like you got to try this croissant at
Oh, it's
so and
best in the
so's
city.
at blankety blank
It's best
intersection.
in the
Best in
city.
the city.
Oh, listen to all these tough New York guys here.
But they still say Houston Street though, right? It's not Austin, right? Joel, you're the
Um,
New York expert, huh?
Austin, Houston, Houston. No, I
It's
don't. Re-
not Houston, it's Houston.
okay, I have. I don't remember that. I don't. I can't. I can't comment on. But what I can comment on is J.C. Penney here, trading up a buck 32 at 728, and I tuned into this one when I got home yesterday, and I saw that it popped up and it was holding like the 670, 680 level, and a lot of times what this stock has done is it has the good news and then it pops up and then it comes right back down. But I noticed that it just wasn't hanging. It just wasn't going down. It was hanging at that 680 level. Went off the board at the 8 o'clock session, right at 677. We've tacked on another 60 cents from there. We've traded all the way up here, the pre-market high at 763. J.C. Penney has not seen these kind of levels. You need to go back here. It has not been in the seven handle since January 10th. And on January, we got some three highs between, actually four highs between 741 and 778. We made it 760 pre market high. Don't know if I'd be shorting it into that level, but if I'd been holding on buying this thing in all the year in 2014, I would be using this opportunity 740 to 760 to lighten up on some
Get
longs here.
out.
Yeah, I mean, come on. I mean, it could just keep going. It's already up. I don't know. Good tip on this one is always to watch the pre-market high, 760. See what they do there, and see if it continues to move. You also have to keep in mind on this one, Kyle, is we closed on $6 was the high, 596. So you're gonna have all those good to cancel orders in the book that are going to need to get filled. So hey, you might get a sneaky low open under $7 and then pop up. But 730 to 760 is going to be the level.
All right, moving on with some more earnings. My favorite bookstore and where I spend my weekends, Barnes and Noble, BKS, reporting 146 versus street estimate of 131. Revenues at 11.6 versus 17. Is that Joel? Oh, no, I'm sorry.
Let me see.
Whoa. BKS. I'm reading the wrong line here, Joel. We
Okay,
have
what are you doing?
86 net comparable to 61 with revs of 2 versus 2.3. That's our BKS beat right there. So Barnes and Noble, we checked her out yesterday. What's she doing after earnings?
Okay, let's take a look here at the only bookstore still around, Barnes and Noble here. Got a spike up to 1940 in the after hours session, but we've come right back down here, consolidating around 18 in a quarter. Really, very few trades here. Have to look at this from the daily charts. If you're looking at this from the daily, Had a nice run up yesterday, but came right back down. Seems to catch the flu here over the $19 level. Two highs over the last three trading sessions there. So rallying into the 19 handle, I expect some resistance. Ahead of that, let's see if they can get above the close at 1847.
Now I heard you guys talking about this when I walked in this morning, but SHLD Sears Holdings reported. Brent, did you say at like 6 a.m. they came in with a super early morning risers earnings call?
Yep, they were doing the call at around. I don't think it started at 6. I think they reported at 6. I think the call started maybe before 6:30. Actually, you know what? No, they did. It looks like the call started right after they reported, so that was right about 6 o'clock. Yeah, super early. Something that I haven't seen.
Why would they do that?
I don't know. I mean, you got to think it's trying to maybe sneak a little something in before a lot of people get in. I'm not sure. Seems funny to
Well,
me. I can't remember Sears doing a call like extremely early anytime before. If anybody out in the chat knows that Sears usually does their call early, correct me. But yeah, this seemed a little funny to me.
The old early conference call trick is what it's
is
called.
is it the old trick?
Yeah, I don't know. But whatever they're doing, they're getting off the mat here a little bit. Just ticked up to 44.05. Not on a lot of volume here. They're taking the numbers in stride here. This thing is so whippy and so thin. It's like impossible start to trade. Let's just keep an eye on this $44 level. You had a 44.01 high back on the 13th, and then a 40 just below that 43.49. So you're popping up to some levels mid-month before they came out with all more bad news here. Breaks above 44. Man, there's just not a lot of resistance in this thing. You had 4 or 5 really bad days coming off the 50 levels. So yeah, there you go. Look at that 43.44. I mean, buck spread in the pre-market here. We're keeping an eye on 44.01 so far, the pre-market high.
Up next, we have the home of showrooming, BBY, reporting this morning. I was really interested in this one. Best Buy reporting 124 versus 101. A nice little beat on the bottom line with revs of 14.5 versus 14.66 street estimate. So a slight miss on the top line, but are we up in the pre-market here with Best Buy?
Yeah, we were. I mean, this thing had that bad news at the beginning of the year and had the gap down. Now it's battling back to that gap area. Ticked up to $28. Lo and behold, the day that they gap down, the high was 28.20. Excellent level to look at there. Above that, you see what you in the daily chart. You guys, I don't have to tell you. You guys are smart. Above the 28.20. Holy mackerel. You got a gap to fill here down up to 36.41. Just that rounding bottom there, kind of letting you in, and now all the people that bought in this area may very well be selling to that rally, keeping a really close eye on the $28 level.
Joel, where are you? What hotel are you staying at in Vegas?
Uh You have to ask Lisa, man. She
Oh,
made the
jeez.
reservations. We're not staying at one of the fancy ones on the strip because I like the suites. I like to be able to move around. So I'll have to find that out for you.
The Golden Nugget. Well, my setup man failed me there, but HLT Hilton's
Oh,
Worldwide
sorry. Oh,
Holdings
sorry. I'm not staying.
reports earnings of 11 cents versus street estimate of 16. Revenues at 2.64 billion versus a 2.975 billion
Ruh-roh.
estimate from the street. How are we looking on Hilton?
Let's see. Shares of Hilton are trading down here. We just ticked down to 21.99. Recent IPO here, 21.99 was the low. Taking a look, they did not like those numbers at all here. Looking at the level here, you had a nice rally going up here. Everything was fine. Matched the high that you had in mid-January. Now coming back on the downside here. You did have a low at 22.04. That was 3 trading sessions ago. That's don't excuse me 22.04. We did trade that in the pre-market. Below that, you got to look at the four lows between 2131 and 2173. Call that whole area 2150 to be at good support here.
Brent, what do we have at the close today? Any notables?
Let me see here real quick.
Do we
Uh,
have what do we Joel? Do you know?
After the close today, Salesforce.com reports CRM, and we'll take a look at that one for a little bit of a preview here. We'll have to, since we don't have the news out. Salesforce has been making a nice run here. Seems to be running into some resistance here. We'll keep an eye on. Let's see what. Ooh, high yesterday, 64.74. You had another high at 64.65, trading up in the pre-market. So let's see if people are looking to lighten up on the Salesforce.com ahead of earnings. I just wanted to go back here. A lot of times we like to talk about sympathy plays here. Marriott, which had a nice run, another hotel stock. Really don't see they hitting it a little bit here in the pre-market. Nothing to get excited about though. Let's just give your traders a level here. If you're looking out for a sympathy play here, oh, I see one for you guys. Oh, this is a nice one. The last two lows, 53.23 and 53.31, double bottom there. If we take that out, could be trading under $53 to $52.52. So see if you get a sympathy play with Marriott. And then the other two in that sector, we have Hot, Starwood. I don't know. How did Starwood come up with the symbol Hot? I don't know. But anyways, let's just take a look at that chart if traders are looking for some sympathy plays here. That one is trading down a little bit. Just hit an all-time high yesterday. 80.72 was yesterday's low. Let's look for that to hold off the open. If not, you might want to try a short down to the 80 buck level. You had the low on Monday at 80.10. And might as well look at Win since I mean, it's a little bit more of a gaming stock, but I know that stock's been hitting all-time highs here, and they're not going to have as much money if I go over there and hit the craps table. But double top there in the 240 area, 240.03, 240.52 is your major resistance there.
Joel, I always just assumed it was short for hotel. Hot.
Hey, man, this guy, I'm telling you. I mean, do you have a master's degree or something?
Nope.
Smart. Hotel, but why would they give
Masters
it?
in being cool.
But why would they give it to them? I mean, it's not like they're the first hotel that was ever around.
They just took advantage of it.
Okay.
Even Colts is coming in the chat room saying "hot" is short for hotel. Joel, come on.
Colts lot. Okay, all right.
Colts got our back.
Well, I didn't hear you saying anything there, Kyle Snazzy Bazzy. I didn't hear.
Well, I could tell Brent was ready and at the beck and call for that one, so I didn't want to take his glory.
Okay, so what else do we got going on there, pal?
Movers. First up is let's go with a rig. RIG. Transocean, it looks like, is on the move this morning, Joel. Up 1.63% in the pre-market.
Yeah, it's popping up here. I haven't seen any specific news on it. It was even much higher in the session. 44.40 it hit. We've come back down to 43.70. Since we're back under this critical $44 level, let's pull it up on the dailies here and let's take a look. 44 is the number here. 44.10 was your high on Monday, and then you had two other highs at 44.20 on the 11th and the 12th. You did sneak above that in the pre-market here, but in order to get carried away on this thing, needs to break above 44.20 for me.
So Transocean did have some earnings late last night. I think it's normal that they normally put out their earnings pretty late, around 5:40 or so last night. Adjusted EPS 73 cents. Analysts were looking for 72 cents. Sales coming in a little worse than expected, 2.33 billion. Analysts were looking for 2.36 billion.
Okay, Brent, we're going to keep you on here for a 1
Yes.
second,
Yes.
and we got to talk about Tesla.
We got to talk about Tesla.
Yeah, I will just recap it here, and then you could give the fundamental news, because I think J-Dot has his old portfolio in this or something, but sold off. But news comes out on the close. I know there was something about some convertible debt that people are just gobbling up here. But we made a high in the pre-market at 267.75. That eclipses the all-time high from yesterday at 265. What's the news?
So they announced a total of $1.6 billion in convertible notes. It's going to be made up of $800 million aggregate principal amount of convertible senior notes due 2019, and then $800 million of the same senior notes due 2021. And I think the street's kind of getting excited here about the prospects for what they're going to use the proceeds on. Right in the, actually, I think it was out in an SEC filing. Right in the SEC filing, they said they're going to use proceeds for development of the company's Gigafactory and Generation 3 vehicles, and also to help expand growth in both the U.S. and international markets. So not so much necessarily the financing, but what they're going to use the proceeds for. That's what the street's getting excited about.
And it looks like people are going to gobble up this debt here, at least, as we've rallied up here. Still keeping an eye on the 265. That was the all-time high. We're below that. 265 up to the pre-market high of 2. Let's get that pre-market high for you guys. 267.75. Violin Maker is probably going to ask me for support here. That is a good question here when this thing trades all over the place. But I guess for support, according to the pre-market chart, you got to give it the 260 area. You just made a low at 259.76 a couple brackets ago. And also, let's see, what's the all-time high close? The all-time high close was from yesterday at 253. Not sure if we're going to get back down there today. But if you guys are holding on to that Tesla, way to go.
And I just saw a note from Merrill Lynch. Bank of America Merrill Lynch reaffirmed a $65 price target on Tesla Motors despite the momentum's stock surge to a record $253 per share at Wednesday's close.
$65.
$65.
I mean, why do they waste their time putting that stuff on the wires, Kyle? I mean, why?
To get noted, maybe, because we're talking about it. I mean, that's all I can think of.
You mean you
those
think
analysts.
Bank of America Merrill Lynch is listening to the pre-market show, and then they think that
Absolutely. I'm looking at all the traffic, and it's that huge surge from their offices right now.
What are you talking about? The brokers are not in that early. They're they're at the gym and getting their fingernails done. They're not they're not in the office here.
You know what some of the banks are talking about related to this deal? They are getting a little, giving a little head nod to some of the battery makers here. Polypore being one of them. That's PPO. There was a Wedbush note out a little bit earlier saying that Polypore may end up getting a royalty stream from the Tesla Gigafactory. And then I'm also looking at a note here from Bank of America Merrill Lynch actually saying that Rockwood Holdings might benefit from the same thing that Wedbush said about Polypore. And Rockwood is, I believe that is ROC. It's a ticker on that one.
Okay. Could you give me those two again? ROC?
Yeah, ROC is Rockwood, and then the other one's Polypore. That one's PPO.
Okay. I mean, they're going to need batteries, right, for all these cars that they're making here. So let's just take a quick look at that. This just seems to be consolidating here at the $79 area. So we'll see what happens with this one. We got to talk about the pot stocks here a little bit here. CANN got a pop here. Noticed this thing has just made a wild move. Had a big day yesterday, just on heavier volume too. This thing yesterday spiked up to 36.75. Pre-market action here. We'll see what's going on in this issue. I mean, what do you think they're banking on with these pot stocks here? You think just they're more approval by more states, and we're going to need more supply here, Kyle?
The green rush, Joel. The green rush. I mean, you're talking about an inelastic good right now that's getting a ton of momentum. I mean, it's a movement, and not only that, you have so many people behind it. We have one of those letters on MarketFi, the 420 investor, and I see all of the momentum into these stocks each and every day, and it's the hot sector right now. Okay. It's burning up.
And if you're short, you're toasting this. We hit 36.75, and we've pulled back here a little bit. Just keep an eye on that all-time high, 36.75 here from pre-market trading.
Well, let's get to some stocks that are building momentum. A continued rally through the housing. PHM, also looking at Toll Brothers, KB Homes, all the goodies.
Okay, yeah. PHM here has been on a roll despite some mixed housing numbers. These stocks continue to rally here. Got a little bump here in the pre-market to 2165. The high in yesterday's session, 2165. There's your number for you, folks. 2165. Keep an eye on that. That coincides with a high that you had back in June, a little bit higher than that at 2182. And the other stocks in the sector, let's see if they are following along. KB Homes trading here. I think that, oh, wow, that had a little bit of rally here in the pre market chart. Looking on the dailies here, KB Homes had a nice run up. Let me get a level for you here on the upside from the daily chart. Spiked up yesterday, made a new high in the move at 2014, or excuse me, 2040. Backed off to settle at 2018. That 2040, we haven't been trading at this level here since April of, excuse me, since May of 2013, you hit a 22.49 high. We'll just have to keep it. We are trading below yesterday's high at 20.40. We'll keep an eye on that as resistance.
Continuing with some movers, a key resistant point in Amazon AMZN, obviously one of our high flyers each and every morning. Joel, what are we seeing on the chart, and where is that key resistance level? It's not 1846, is it?
No, no, but it probably equates to something in 1846. Hit a high yesterday in Amazon, 364.75, folks. And then if you go back to February 10th, you hit a high at 365. So hey, $400, $400 stock, pretty close if it's a double bottom there or a double top there. So major resistance at the 365 level here. Getting a little bounce after the bad earnings, but if you don't get continuation to this 365 level, could be heading back down. Maybe test those lows in the move at 340.
Last but not least on our movers list this morning, we see some continued weakness in Verizon VZ with a possible, what do you call it, Joel? Sympathy play in AT&T.
And they did that spin off with the Vodafone and put a lot of a lot of stock out there, a lot of stock for sale on the conversion. This thing is just sitting down at the lows of its move. Actually, in the pre-market trading, we did trade under $46. We went down to 45.86. The recent low of the move has been below that at 45.45 and 45.56 here. So coming into some key levels here, under 46 here in Verizon, AT&T. I was discussing this with Dennis too, and he was looking at this as well. If the market's taking off and the market's breaking out to new highs, what do you want to be in a stock that's just paying a 4 or 5% dividend, and when you can, but the market hasn't broken out to new highs, and AT&T hasn't rallied. This is the lowest this stock has been here. So you have to go back all the way to April of 2012 when we traded down to under $30. We're not quite there yet. But let's keep an eye on the recent low of the move here at 31.74. Did tick under 31.85 to 31.82 in the pre-market. So important level for AT&T at 31.75.
Joel, and just to remind our pre-market traders, we do have our first guest up at 8:35 a.m. Eastern Time. Fari Hamzei coming on, one of my favorite guys and a great trader. But can you remind us when you reference a date that a level hasn't hit in, like you just said, since April of last year? What kind of importance does that put onto how I'm actually looking at trading the stock?
It's big importance because you have to look at it, from people that people tend to hold their stocks in a long-term fashion, and they pick a level, and they, if they lose it and the stock goes away from them, they'll say, well, when it gets back to that level, when it finally gets back to that level, I'm gonna sell. The market has a history of remembering. Its highs and its lows, and to me, that a longer that a level has stood, the more significance this has because people that are short are going to be looking at saying, "Oh wow, it hasn't been down there in 2 years." They're looking to cover. People that are looking to get initiate a long are looking at as well, and that's why you get when you get these crazy breakaway moves like it's something like Tesla, is there's no one to sell up there because no one bought and got slammed, and that's kind of what you had happen in the S&Ps as well the other day when we floated up above that 1846.75. Just the sellers evaporated. Now the question is can we find some buyers in the market here? We just had some news here. Just popped the S&Ps over the 1840 level here. I think we had some good economic data that came out. Brent, what was that? The durable good orders?
Durable goods orders also had jobless claims. Let me get you those durable goods first. For January, minus 1%. Economists were looking for a decline of minus 1.7%. And then durable goods, excluding transportation, which is the core reading, up 1.1%. Economists were looking for a decline of 0.3%. Also, jobless claims, initial jobless claims for the week ended February 22nd, 348,000. Economists were looking for 335,000. So a couple data points in there look like bumping the futures just a couple ticks higher here.
Right. Could not get, though, to the close. We're going to keep an eye on the close here. 1842 even. That recent pop took us up just shy of that level to 1841.75, folks. So if you want to get excited on the long side, you got to take out that close. Hold the close 1842. We're falling right back down to this 1838 level.
All right, we got some key ratings here right before this 8:35 interview with Fari. Everybody, make sure to keep typing in your tickers into the chat. We're going to keep covering them. First up, we have Goldman Sachs downgrading VF Corp right around that $60 price target that they had on it. We got anything looking good on the VFC chart, Joel?
Let's see. When Goldman Sachs here making a call on the issue, knocked 50 cents off it. Just, I don't like the way this pre-market chart looks. Just hit 59, just kind of sitting there. Looking at the trades from yesterday, 59.07 was yesterday's low. Needs to hold 59, or I'd be looking for 58.50 in this one.
Pop your collar. Goldman Sachs also upgrades Ralph Lauren.
Oh,
Joel's going to be wearing that with his bathing suit this weekend.
yeah.
Joel, did we get a move in Ralph Lauren for any trades this morning?
Okay, let's just take a look here at Polo here. I know they upped the price target on that. They got an initial pop here. Oh boy, not a lot of volume though. Got a pop up, boy, to 163 here. It looks like was 162.99. There was not a big trade there. Have fallen back down under 160. Just hit a low at 159.51. Pretty wide parameters there. On the upside here, yesterday's high 164.40. You had another wild range day where you made a high in the 164 handle. Another high of 164 in January here. So that's on the upside here. Didn't quite hit it yet in the pre-market, but won't fall in love with this thing until it gets over 164.
Bank of America gives a nudge down to Deutsche Bank DB from a buy to a neutral. What are we seeing? Anything down onto the downside for Deutsche this morning?
Yeah, it is trading down here quite a bit. Of course, ADR here, you got to be careful. Just made a low 47.40 here in the pre-market. Not getting much of a bounce. If the decline continues here, there's some good support under 47, 46.86, and 46.96. Kyle, before we do any more ratings here, we got a question here on a dead cat bounce here in J.C. Penney. Boy, I tell you, this is tough. I think I would use the opportunity. This is an opportunity to sell into this thing. I don't know. Shorting it, you got a lot of people short. You got the herd. If you are looking for this to be a dead cat bounce, 763 was the high in the pre-market, and then you also had a high at seven. You had four highs between 741 and 778. So that's a huge resistance level. If it opens up there and doesn't get a lot of follow through, then I look for it to peel back, find a little support at the $7 level. On a lot of occasions, though, when the J.C. Penney's come out with this news, it's popped, and then boy, once the regular session starts, it just is really caved in. So open's going to be important here for J.C. Penney.
All right, folks, we're going to take a quick break and bring on our first guest of the morning, Fari Hamzei. We'll be right back.
Okay. Welcome back, traders and investors. It's that special time of the week where we got Fari Hamzei in to give us his outlook on the market. Fari, right away you picked up that call and you sounded in a good mood. How you doing today?
I'm good. Good morning. Good to be with you. Hi, Kyle. How, Joel?
Okay.
Fari, good morning, buddy. You were begging us right in the break there to jump right into the Momo mains. Joel, if it's okay with you, I want to get Fari on some Tesla. I know we touched on it earlier today, but Fari, you're screaming Momo at us. What are you liking in Tesla?
Well, we've been bullish on it from pre-earnings. As you know, we put a call spread on for the EPS trade, and it didn't exactly go our way that day, but during the follow-up, we gave it a 7-day window so that we didn't jam ourselves into it has to be at this price by this date, and it worked out really nice. Unfortunately, we rushed it a little bit. We really could have really cleaned up, given the prices now, because our call spread was 220, 230, and I think we exited on the Tuesday, and the big move was yesterday, right?
Right.
Yeah, the big move was yesterday, correct.
What
And this has to do with their, the change they're thinking about to do with battery. There was some rumors out there before. I think yesterday it became concrete from what I hear. And again, overnight, it's another 8 points up, string at 261. So it's all-time high.
What did you put
Way
that?
to go, Elon.
What did you put that spread on for?
I think we put it for $1.75, something like that.
Okay.
Our rule is not to go over 30% of the width of the spread. Okay. If you go beyond 30%, that is, you're putting like $4 to win $10. You're setting yourself up to be disappointed. Usually try to get it to maybe 15%, 20%. Our line in the sand is 30%.
Okay, folks, what Fari's emphasizing here and what we try and talk about a lot on the show is risk-reward ratio here. So what he was looking at is he was risking $1.75, and what I like about what he does is he knows that the most that he can make on that is at 8.25. So that, you are a little bummed that it busted out over 230, but you were in a position where you locked your gain in. You couldn't make more than the difference in the call spread minus the
but
premium.
there's a reason for that.
Go ahead.
The reason is this: if you go through your option chain to pick what the components should be, either outright or spread, you are also looking for some targets. Okay, and we use volatility based sigma channels to look at possible targets out there, and I believe that 227 was our target because that was the day on the day of EPS. 227 was 3 sigma. At 3 sigma, you're looking at 99.97% of travel. So you at 227 we're pushing it. So, but still we said, okay, let's find a spread that makes sense in terms of which these are weeklies. You have weeklies, you have also monthlies. Which is spread that makes sense, that it's under 30%, falls around 227, okay? And the reason we wanted to do a spread was volatility. Volatilities were juiced up the last week, which was the normal expiration, the monthlies. I believe the Tesla right before EPS was like 184, 183 vol. I mean, the only person who makes money at that rate is if you go outright. Outright, the only person who's making money at that rate is the market maker. Why? Because even if the underlying moves your way, the collapse of the volatility the day after. Remember, what matters is the next day. At night, you cannot exit. It's an option, right? So you have to make sure the cash markets opens the next day. At that point, the volatility is going to collapse because the unknown is taken out of the equation, right? Now we have EPS. We know what that number is. We have their conference call. We know their guidance. When those are become known, the volatility is going to collapse. So if you don't sell a call higher and not make it a spread and just be outright, you own that volatility, including its collapse. By selling one higher, you squeeze the volatility down so that you increase your chances. It makes sense for that trade to be a call spread.
Okay,
as you see, it's a checklist you go through of how to construct it.
Okay, we're talking about some other Momo stocks here. What else you got on the Fari radar?
Oh, I like Amazon. I like FB, Facebook. Believe it or not, I like Google. Google actually is probably least juiced up stock. Don't look at the value. Look at fundamentals too. What their PE ratio is. I like Netflix. I like let's see, Solar City, another Elon Musk operation. Of course, Tesla. We've been looking at Twitter. Let's see.
While you do, I just want to point out.
I don't know about Priceline. I've never had a really good chance with Priceline, but
what are you looking at on Twitter?
It seems like.
Are you looking at the long side on Twitter?
Yes.
And another thing that I wanted to point out, which
there's a reason there. This is where the managers are going to be. People who are behind. Remember, we've had a tough January. They're trying to catch up, given where the indexes are arcing right now. We're at 1845 on the cash on SPX. The 2 sigma is 1876. There's a small window here that they can make some money, and it's not going to be an index. It's going to be these Momo names.
Okay, all right.
That's why you see the activity there. See, you got to justify where the activity is, so understand the phenomenon that's happening.
And the other thing that you did on the Tesla, I think, which is important to point out, is that you gave yourself another week. The earnings came out last week, but you said, hey, you're not going to pin yourself down. You're going to give yourself a little bit more time. Since you were on the premium end, selling the option here, you bought yourself a little bit of protection. And I think a lot of times these weeklies are very enticing, but then a lot of times the move the pinning that goes on, the moves take place the following week. So that's another important thing in Fari's strategy I wanted to point out.
Joel, here's another way of looking at it. If let's say the EPS is on Wednesday, okay? Wednesday. And let's stay just with weeklies, okay? To make it simple. The EPS is on Wednesday. So it's going to report after the close on Wednesday. All high techs do. Okay. You have 2 days to go. There are times you could find something good for the 2 days. Those you really need to push up in terms of where the sigma levels you're looking at. And those maybe you could take outright. All right? Now, the very few names will respond to that. One of them is Google. Now, what happens to that trade? That trade becomes what we call lotto. you do it outright. You don't do a call spread. You just buy a call, but high up, way out of money. Okay, so only big names could respond to that. Apple possibly can, Google can. But then, what else you need to do? I would suggest you do a 2-day outright call, but then also put a secondary trade on, a call spread for a week forward, just as a backup in case your out of the money doesn't kick in. Okay, you'll take somewhere in the middle between where we are and that high target, and do a call spread there with a week forward. Okay, you can put 2 trades on. There's no rule how many trades you can put on before EPS, and we've done that. Sometimes both of them hit, very few times. Most of the time, yeah, you get disappointed when they're way out of the money because the Sigma channels were pushing it. But the one in the middle kicks in, and you get your 10 points. You get your 5 points.
You get your juice. You get your juice. Oh.
Exactly. I mean, and it also pays for the other trade you did.
Okay, what
Remember,
about the
EPS trades are, I usually tell to my room, hey, if you guys had a good day in the futures, take a little bit of that, look at this EPS we're looking at. Why? There is a chance that you could even, for example, with Netflix, and Netflix is an expensive one, you have to be careful with that. But on Netflix, for example, in October, our target was 380. I think the stock was trading 330, 340. Or maybe a little bit lower than 320 area. I forget. After hours, after the EPS came out and conference call began, it went to 389, 387, somewhere there.
I remember
Next
that.
morning, cash opens. Guess what? Call icon sells half of his position. Within an hour, we're back to scene of decline, 320.
Yeah, I remember that. I remember talking to
Yeah.
you about that. So let's just talk a little bit general market here because
Okay.
I think it's really interesting here. I did a little piece on it. You know, did we have a breakout or a fake out? We had all these highs in the S&Ps. I believe I counted up to like 12 or 13 highs right in the 1845 area. We had the all-time high on December 31st at 1846.50. We barreled through there earlier in the week, rallied up another 10 points. No
Right.
sellers. Buyers got exhausted. Boom, we come right back down. We settle at that all-important 1846 level. 2 days in a row, settled at 1842 yesterday, 1847 high today. What are your Sigmas telling us? Is this a breakout or a fake out?
The more we stay up here, again, this is just experience.
Mm-hmm.
I mean, watching this stuff, I've been in front of the screens pretty much from like 95, 96 straight on to now, every day. The more you see it sit like this, there's a chance to go to 2 sigma. Remember,
Where's 2
indices
sigma?
don't go
Where's
to
2
3 sigma. That's a too far.
Where's 2 sigma?
1876 on the cash.
Are you going to tell us about how you calculate your sigma, or would you have to kill us if you did?
No, we don't have to kill you. No, this is actually, sigma is from Ottoman Empire. It's 400 years old. It's called the standard deviation. Basically, you take a mean. I remember my background was double E, so I'm dealing with signal to noise ratio. The price action is like a EKG. It goes up and down, moves. What you need to smooth it and take the noise out. Well, one simple way is put a 20-day or 20 bar, we call it, moving average. Okay, you don't want to make it too long because then you create a lag, and you don't want it too short, then it becomes too jittery. But that creates your baseline. That becomes your what we call 0 sig. The 20-day moving average. And then you calculate along with that, right that moment. And as a matter of fact, on charts that are live, like let's say eCigo, TradeStation, what have you, it's computed in real time. As each price comes in, it recomputes. And it projects it what the level should be. And then you take the standard deviation of the 20 days. So you have 0 sig, which is the moving average, and you build 3 levels up, 3 standard deviations, sigma 1, sigma 2, sigma 3, and then 3 standard deviations down, -1 sigma, -2 sigma, -3 sigma. Okay, it's no different than expanded Bollinger Band, if you think about it.
Yeah,
right?
it's funny.
But
Violin
the
maker.
key is the rules. The key is not the charts. The key what the rules are. The rules are simple. If we break out, go through a 0 sig, okay, and get into between +1 and +2. Okay, it's crucial. +1 and +2, we have a chance to move up gradually, and that could go on for a while. And then where's the exhaustion? We go above 2 sigma and we fail. On the index, that's very true. Like SPX, you hardly see 3 sigma. You sometimes you see -3 sigma, like we did February 3rd, first day of trading in February. That was a -3 sigma. Usually when that happens, that's a low.
And it sure.
Because why? On the downside, again, we've talked about this before. You got elevator versus escalator. There's fear involved. During the fear of when we go down, and remember, who is at risk? The longs. How much longs we have? Well, a lot more longs we have than shorts, right? The stock market in itself is long, right?
Correct.
So there's more people are at risk on the downside. That's what creates that cascading push down. We're going to go through -2 sigma, like hot knife through butter, and we hit 3 sigma, and you'll see prices stop. There's no magic. You just have to concentrate. I don't pull these numbers out of the hat. I look at a chart. I'll see what the sigma levels are. I call into the room. I say, guys, at this level, we're going to start covering our shorts.
Right.
I think the reversal is coming. Now, you'll have a day or two maybe of hesitation. That's normal. But you'll see, and how do you see it? It starts separating from the -3 sigma. -3 sigma still keeps on going down, but the price isn't.
So
That's your divergence.
Fari,
There's your turn coming. At that point, you start buying some, let's say, SPY options. Why? Because nobody can pinpoint the highs or the lows, and we're in that business. We're in the business of taking 70% of the chunk in between. Okay? And options would be a good tool. You have a defined risk, and you have a little bit of time. So you're not going out there trying to bet with futures and get your ass kicked.
Okay, we need to close out the interview here, though, and I really like the point that you made about the longer we hang up here, the more chance you think we're going to bust out to 2 sigma 1876. Are you
Correct.
looking for today, tomorrow? We've already hung up here for a couple days. A lot of people jumped in after Momo guys jumped in on the upside. Can you just give us a quick, are you looking for today, tomorrow, early next week?
I would look at 2 things. The known and the unknown. The known is the economic calendar. Who's speaking? Like today, Yellen is speaking.
Yep.
What kind of econ data are we getting? These are the known ones. The unknowns are something like Ukraine.
Okay.
So some of it you have to be on a watch. Some of it, you know what the events are, and then you look at how the market is reacting to it. Remember, it's not the economics. It's not looking at what your econ professor told you. Throw those books out of the window. Look at what the market is doing.
Right.
In light of the news.
Price don't lie. Okay, Fari.
Exactly.
Thanks a lot for coming on again today.
Thanks for having me.
Very lively. Can't wait to talk to you next Thursday. Have a good day.
Same to you, sir.
All right.
Joel, that's I'm sitting here in just awed silence that man. I met him in Chicago one morning for breakfast, and I got that what he just went through right there. I think I got 4 words, and it was an hour and 45-minute breakfast, but I learned more in an hour and 45 than I think I did all of my 4 years and $50,000 worth of college. So
and by then all your soup was cold, right?
all my soup was cold.
But you know what I like about Fari is that he's very he comes on every week and he talks about different stocks and things, but he's very consistent with his strategies and what he tries to do. You can tell, that he has his gains and his losses, and he has his strategies, his risk reward, but he sticks with his principles. He sticks what, is learned and what's worked for him, and he's really great to have him on. We're very lucky. And thanks to Options House for introducing him to him. He's a wonderful guest here. Before we get to our second guest, Steve Spencer of SMB Capital,
which I'm excited for today.
Yeah, tough. Oh, you're going to stay on, or are you going to take a coffee break like you usually do?
I'm taking a coffee break, and I'll listen to you and Steve go at it.
You've got about 10
Steve's
minutes,
a great
Joel.
guy.
Steve's not available until 9:05, so you got 10 minutes.
Joe, you did not put that in the Asana.
I actually did put it in the Skype chat, though.
And folks, I dropped a link to Fari's website. Go check he's got a chat room and some services that he offers. So I would highly recommend you go see what Fari's got to offer if you want to learn more from that man, which he has a lot to offer.
Okay, we still have 10 minutes here, and I'm gonna go over some of these symbols here. I hope I was jotting them down as you guys were putting them in here. If I did miss one, please let me know. I want to give you guys opinion on what's going on here. VIPS here, VIP Shop Holdings Limited. Got a level for you to look up here at Violin. I think this came from Violin Maker here. We are trading up here in the pre-market. Real spotty trade here. I just see a little odd lots. But what you're going to be concentrating on today is 122.60, which was the all-time high from yesterday's trading. That's reinforced by the February 14th high of 122.24. You want to see this baby just rip above 122.60 and keep going. But when you see levels like that, 122.24 and 122.60, it gives you a who's that? Is that you typing over there, Kyle, or is that Joe?
It sounds like an Apple keyboard. I
Y-
think it's Kyle.
I think it's Kyle. Okay. Double top up there. Keep an eye on it. 122.40, 122.60. That's an important levels here.
Joe,
And
go. I want to see Wendy's. WEN. Actually, that
oh,
was an interesting one.
Vendy's, as Lisa's grandma used to say. Uh,
Wendy's. Do you know? Have
Vendy's.
you seen the commercials with the fiery redhead?
No,
Oh,
no.
she
You
is
you
fiery.
haven't
Are
you
we talking
haven't
about
not seen
Wendy's?
the Wendy's commercials? I'll have to show those to you.
I don't
He
really.
must have forgotta.
Oh,
Ciabatta?
yeah, 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 yeah. I
Yeah, see, he
forgot my
catches the
ciabatta. I
tagline.
have seen that because they do put that on during sporting events. Yes, I did. Oh, you forgot your ciabatta. Yeah, I have seen that. I take that back. We just hit 10.27 here in the pre-market and fallen back under the $10 level. You just got to keep 10 on the mind here. Let's going back to 2007, 2008, had a bunch of tops just under the $10 level. You have cleared it in 3 trading sessions in a row. You've cleared it. You've closed above it twice. Trading below it now. You got to figure double digits for the stock. Like to see it get back over 10 and post a few more closes over that level. Not sure if SRPT is out with earnings yet, but this wild child here. Brent, you got some fundamental information on that?
Yeah, Sarepta did have results, and Wendy's did also have results. Just to go back to that one really quick. Sarepta looks like we're looking at a Q4 loss of 77 cents per share. Analysts were looking for a 69-cent per share loss. Sales looks like also missing 2.6 million. Analysts were looking for over 4.5 million.
It seems like they're a little disappointed here. They took it down under 28.50, made a low at 28 even. Got a nice bounce up to 29.78, so 28 to 30, your early parameters. This is the level I'm looking at, though. I'm looking at $29 here. We are trading substantially above it. That was the lows from Tuesday and Wednesday, 29.02, 29.06. That's your major support. Coming on the upside here, 31.13, 31.28. Your highs from Monday and Tuesday. That should be a good resistance point.
Joel, I want to take a look at Palo Alto Networks real quick. Can we get the levels for that before we bring on our next guest? I think this is coming from Colts.
Oh, Cold Sluck, new to the chat room here. We don't want to disappoint him. Let's take a look at Pat. I think they had some bust up earnings earlier in the week. Had a nice rally going here. Ooh, kind of a scary looking chart here. On the day, look at this, Kyle. I mean, if you ever have a stock, they have great earnings. How many times does it go up and make that high, and then I think
Comes right back
it
down to
comes
those
right.
to the level
Ooh,
that it ripped up from.
and this is crazy. This got up to 79.99, coinciding with your whole number theory at the $80 level. And now you came down yesterday's low at 73.55, and then you had all those tops right in that area at 74. So I'd say this thing, as long as it holds the low from yesterday at 73.55, because it's filled the gap and everything, I give it a chance to go back up there and trade. What did we have? We had basically a little over a 6 point drop. I'd like to see it get back to that all time high close the day on earnings, 76.78. get back above there, close above that, and I think we'll be going back to the $80 level. But looks like some profit taking under this 74 here. Things kind of open up. Minor support at 72.45, and then major support at the double bottom from February 19th and 20th at 71.32, 71.39.
Joel, did you pull up Facebook when we were talking to Fari?
I don't think so. He rattled through so many of them here. Let's just take a look at Facebook here. I did notice some key levels in that yesterday, and it's kind of funny here because you do the math, and you had a high, the all-time high 71.44, and then the following day you had a high at 71 even, right? So how do you pick a number between 71 even and 71.44? What would be like the simplest way for you to, if you were looking for an intermediate level of the sell and you saw those two numbers, what would pop out in your head? Kyle?
Sorry, I was on mute. I said I was going to post it on my Facebook wall and ask my Facebook friends maybe, and land right in the middle.
Exactly. 71.22 was yesterday's high, right to the nose. Good
Yep.
job. Yeah, and it hit that. Didn't close above 71. The all-time high is 70.78. We're a buck 40 away from there. So I'd use that all-time high close as opposed to the three highs above 71 if you wanted to exit this thing on a rally. Things are starting to get dicey on the downside, though, Dennis. Hit a low at 68.85 yesterday. And then if you go back to Friday and Monday, you had two lows at 68.45 and 68.54. Absolutely crucial for 68.50 to hold here in this Facebook. Below 68.50, you can just look at the daily chart.
Joel, now when you say it needs to hold, are you talking about through another close, or what do you look for confirmation on
Intraday.
that in the
And
hold?
something like this, man, you cannot wait for the close because, it could go through 68.50 and end up the day, at 66. So I'm looking at that if you're holding a position in it, you're swing trader, intermediate day trader. If I'm long this thing long term or on a day trade, I don't want to see this thing trading below 68.50 at all. The first time down, it might come down and have a little pop. But also it'd be a decent place to cover short. But I'm looking at pretty much everything I'm speaking is on an intraday basis.
All right, well, let's look in its social media counterpart, Twitter, real quick. I know Fari mentioned that one too, TWTR. Before we get to our next guest at 9:05 a.m., Steve Spencer from SMB Capital. I promise you guys are going to want to hear that one as well.
Okay, Twitter is big. I was trading up here in the pre-market. Just made a high here. Let's see what the pre-market high was. We just made a pre-market high of 56.54, just kind of hanging up here towards this level. What I think is interesting about Twitter here is going back. You had let's going back here. 5 trading sessions. It's been confined between 54.65 and 57.20 here. So may have to look at like a strangle in this thing here because it's not. It looks like actually I hate to say it, but I think looks like it's winding up to go north again here because you had to spike low after earnings, you had to bump up, had to move up to the next level. Now you're having a little bit more consolidation. If I was looking at this thing from a swing trade perspective, 54.62 to 54.65, a double bottom from the 19th and 20th. Looks like good support, and you still got a long ways to go. You had the 74.73 high. You basically had a 25-point break down to the 50 level. So really, I mean, this thing can go back up and trade, 62 and a half, 63. Just to check the validity of the big break that it had. So, talking a little bullish here in Twitter.
Whoa, we had a bull in Twitter. Well, folks, we're gonna take a quick break, and when we come back, we're gonna pull on Steve Spencer from SMB. That's also gonna do it for me today. I will see everybody back for the final week's edition on Friday for the pre-market prep. We'll see you guys in just a second.
Do, 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 do.
dingy. A two a ringy dingy.
Steven can't come to the phone right now. Please leave a message.
Try this again. There he is.
What's his role there?
You'll have to ask him.
Okay, I just can't pull it up on there. Oh, one a ringy ding.
Steve?
Yes.
Hey, Joe Young at Benzinga. How are you?
Good. How are you this morning?
Very well, very well. I'm on here with Joel L. Condon. He's the one who's going to be asking you the questions today, so I'll let him introduce himself, and we can get started.
Okay.
Okay, and Steve, what's your role there?
My role at
title.
SMB Capital is I'm a founding partner of the trading desk back in 2006.
Okay, the founding
And a
partner.
full-time trader trading U.S. equities markets,
Okay.
both futures and options.
Okay, and I'm sorry, Steve Spence or Spencer?
Yes.
Spencer. Okay, all right, I'm going to count you down, and then 3, 2, 1, and we'll be on, okay?
Sounds good.
Okay, 3, 2, 1. Welcome back, traders and investors. Steve Spencer here of SMB Capital, founding partner there. Steve, how you doing this morning?
I'm great. How are you, Joel?
I'm doing well. Could you just give us a little bit of your market and education background?
Sure. Education, undergrad, went to Wharton Business School, started trading in the mid-1990s while I actually simultaneously went to law school. Have been trading full-time. Next week will be my 18-year anniversary. Started out trading on NASDAQ stock market, worked for a firm in downtown Manhattan on Broad Street, and after about a decade, founded my own trading desk with a good friend, fellow trader Mike Bellafiore, who's well known for One Good Trade, his first book on kind of the founding of our firm.
Okay, so you've traded a lot of different markets in your career. Do you have a favorite and a least favorite?
You know, that's something that I was actually thinking about recently because the market that we've been in for the last couple of years is something that I wrote about in the beginning of 2013, and I came up with the term new normal to describe a market with lower overall volatility that was more conducive for swing trading and longer hold periods because of that lower gap risk, lower event risk. And you compare that to what we went through in late summer, early fall of 2011, where the U.S. markets seemed to be very concerned about what was going on in Europe and other macro-type risks. And the one thing about 2011, when the market swings 3, 4, 5% a day, there's incredible opportunity for a short-term trader such as myself. And I'm happy to get in there and get short and get long and trade that momentum. But honestly, as I was thinking about it over the last month or so, I actually prefer the market that we've been in since 2012 and 13, where there's that level of stability that I know that if I'm holding a large book overnight, I don't have to come in the next morning and worry about the market gapping up 3%, down 3%. Maybe it's because I'm a little bit older now and I've been doing this for a long time,
Right.
so I don't need as much excitement. But that's kind of my thought overall.
Okay. So what was the most important trading lesson you learned early in your career?
That was, like most traders who've been around the game for a while, you learn things very early in your career that you either take them to heart and make changes, or you're eliminated from the game rather quickly. And I think one of the things I learned probably in my first few months of trading at my first job was not to overvalue my knowledge about companies or specific fundamentals when I'm using them in short-term trading. And I learned that, very quickly because of my background. I went to business school, been reading the Wall Street Journal probably since I was 12 or 13 years old. I knew a lot about the companies that I was actually trading. And when I started to apply that information and that knowledge to form a bias based on certain fundamentals, I was losing money very quickly. When I moved away from that and I started to understand that, what's moving stocks in the short term is not the things that are the same as what drives them long term on Warren Buffett's time frame. And so learned that lesson quickly, and I've incorporated that into my trading style over the years.
Okay, so are you still kind of sticking with the core strategies that you developed early on in your career, or are you constantly looking to develop new strategies?
Definitely looking to develop new strategies, and so to me, I think there's two parts to that. Number one, it's about 11 or 12 years ago that the core strategy related to short-term equity trading that Mike Bellettieri and myself started to develop, which is this concept of stocks in play, stocks that have fresh news catalysts. We had to develop that strategy because the market basically, after the internet bubble burst in 2000, and we went down for about 18 months, in 2002, the market basically stopped moving. There was no volatility, no movement overall, and so that we honed in on trading stocks with catalysts. We've been using that technique to trade stocks short term now for over a decade. So that's one part of it. That's one part of the question. The next part is developing new strategies. And as managing a desk in New York City, we really focus in on, once our traders learn our core equity strategy, growing them out in options, growing them out in other products. And so we're constantly developing new education, new training for our traders so that they can expand. Because not only do they have to be flexible in how they're trading equities markets as they change over time, but they really need to be introduced into other markets once they have a core set of skills and they're consistently profitable trading equities.
Okay, so tell us about SMB Capital. What kind of courses do you offer? The cost? How often are courses offered?
Sure. So for our trading desk, trading guys for our desk at SMB Capital, there is no cost. We usually run 2 to 3 times a year. We bring in traders. It's highly selective. We probably get 10,000 plus resumes a year. Our education company, which is SMBU, short for SMB University, which you can check out on the web at smbu.com, has various courses on equities and other instruments throughout the year. I think the most popular program that was launched in 2013 in the fall, and we just actually are doing now our second session, is a mentoring program called DNA, SMB DNA, which is a 10-week mentoring program, which I think runs a couple of $1,000, which is delivered primarily 5 sessions through myself and Mike Bellettieri, partner at SMB, and also traders have access to many of those core trading videos and lessons that are offered to the traders we train for our desk in New York City. And we also offer tools. The one way that I connect directly with people outside of my firm, each morning I'm doing a morning meeting for the traders on the desk. We've opened that up through SMB tools to members of the general public, and I'm pretty sure I'm the only pro trader trading full-time that's working at his desk each morning that actually is broadcasting his morning meeting outside the desk. I'm giving actionable ideas each morning. I'm trading, and people can actually see my trades and trades that traders on our desk are making live throughout the day with the technology we built.
So they can say, "Oh, Steve got me into that one. Oh, that's why I have a loser on that one, right?"
Yeah, that's painful when I see stuff like that. But again, I think for us, and one of the things that when we did start offering the training program to the general public, I guess 4 or 5 years ago that we were giving to our desk, our training programs are at the core are what we call based on the principles of elite performance. And there are certain skills that need to be developed over time before people enter and start trading the market and risking real dollars. So I'd say on the trading tool side, yes, even the novice can come in and see what we're doing and watch, but we always encourage people who are intermediate to advanced level traders to take a mentoring program, start working with a mentor, even if it's not with us. But before you're risking real money, real dollars in the market, understand that skills that need to be developed, spend some time developing them, do some paper trading, and then slowly work your way into the market so as not to kind of blow yourself up which is what most people
What
do when they come
happens?
to the market.
So you got clients from all different facets of life, right? Some people that are traders and maybe have hit a rut that are trying to improve on their skills. You got probably college kids coming out that are wanting a career, maybe people that are retired. So you really got a wide variety of people that come to your firm to trade. Then I assume.
Absolutely, a wide variety come to our firm to trade, and then also we work globally. I mean, we train traders for other trading firms around the globe. We train traders, we work with other exchanges. So I think that, if you go to Google and you type in, trading blog, the first result, I believe, is our blog. We have pro traders trading different products, different markets, writing and creating videos and content free. And I think we have the most prolific trading blog out there. And I think that's why we have over 50 countries a month, or maybe it's 100 now, coming to the blog, learning what we're doing. And it's everyone from the novice all the way up to pro traders. Pro traders also use our tools. And as I said, we've over the years, we've worked with training traders for other firms.
Okay. So I mean, just from what I've gathered so far, you're pretty much trades are based on technicals. What type of charts do you prefer? What time frames do you follow? Just a follow up. Do you trade after hours or pre market?
So let me answer all three parts of that.
Okay.
First thing, technology, charting software. We have charting software that works with our platform. We trade on our own proprietary platform. For those who don't obviously have access to that, who aren't on our desk, you can take a look at TradeStation. You can take a look at eSignal. Those are two nice solutions that traders on our desk use. The most popular one is TradeStation. There you go, free plug. I don't get anything from them. The second thing, you mentioned about primary technicals. That's actually not the case. So that is one of the three factors we look at when we do make our trading decisions. The one thing that I think clearly stands out and makes us different from many other traders and many desks is it's one of three factors we look at. The other two being catalyst, understanding what fresh news or what's going on in that particular company or sector. And then the third thing is the tape. I think that's what we became known for over the years is how we use the tape to inform some of our trading decisions. So that's a three-part process for us. And then I think the
after hours or after hours.
Oh, after hours pre-market. Absolutely. So because we began our careers trading NASDAQ stocks, which really those were the primary ones that traded in the after hours and pre-market, that's something that we definitely do. There's certainly a lot of money there. There's less HFT involved at that time.
Mm-hmm.
So traders on our desk, after they've been trained up, after about 6 months, we'll allow them to start trading a little bit after hours and pre-market. And generally, after a couple of years, it is a primary way that traders on the desk are making money. We've had many requests to develop a specific program for that. We haven't had the time yet to do it. And at some point in the future, I'm sure we will. There does seem to be a demand for it.
Yeah, Instinet, right? Remember when you used to? That's
Instinet,
the way.
yes, exactly. So when I first started Instinet, that was who we traded with in the pre-market, and the cost of trading with Instinet, people who trade today wouldn't believe what it actually costs for me to move in and out of my positions.
Yeah, I remember that. So so let's just take a look at something today that had some seemingly good news, trading up quite a bit here in the pre-market. J.C. Penney, many thought it was on the road to zero here, popping up nicely in the pre-market here. It's trading up quite a bit. Now, so there's news on today. There's a catalyst. There's technicals. Is this something you think your traders may be getting dirty in today?
Yes, absolutely. And then my last trade in JCPenney was actually on that flush below $5 a share. I bought a bunch, and when it popped up over the next few days, I stock tweeted about this yesterday. It popped up 10%, and I took it. I said, "This is a piece of garbage. I'll take that quick 10%." and here we are, 30% later. But yeah, absolutely. I'm not in front of my screen right now as I'm talking to you. So I don't know where. Last I checked, it was trading around $7 a share.
Yeah, it got up to $7.63 here in the pre-market, and we've pulled back to $7.40, $7.44. I was looking at this the 763 area coincides with four highs that you had in the issue back in January. So, boy,
I agree. I was actually involved in the stock then, and had a lot of trouble in the 760s. And so I would say, from a risk reward standpoint, I don't really like belonging up here anymore. And if it started to hold below 760 and drops 750, I think there might be some good money short. Next support area that I would think about based on my trading from when it was up at these levels is around 720 or so. So if it fails here and starts to come in, I'd be looking at the short side for a move back down into 720. Been doing a lot of different things this morning, so I
okay.
didn't completely familiarize myself with
Well,
all the
that's a
news and everything. But from a technical standpoint, those are the prices that I'd be looking at based on the last time I traded up at these levels.
No, that's good. So no, that's excellent. That's an excellent. I mean, I wouldn't be buying it up here either, but it's just another question. You got a lot of shorts, a lot of competition here. I like to keep an eye on the pre-market high. I know you're not in front of your screen, but is there anything else on your radar for today that traders should maybe pay attention to?
Yes, I actually just did sit down in front of my screen because I
Okay.
wanted to I
Sorry
wanted to
about that.
punch up and see what's going on. Well, let me just mention Baidu briefly, which Baidu had a very nice run up into earnings, had a pulled back all the way to the low 150s, spent the last week or so consolidating in the low 170s. 170 had been big support on the when it previously had made that run up to all-time highs. Looking at the initial reaction was very positive to earnings. Later in the, I guess in the early morning hours, it traded back down close to 170. It's now failed to hold above 180. So I guess my thought on Baidu is to watch 175 to 174. If it continues to support there, look to trade it on the long side for a move back up to the low 180s, 181-ish. And I guess that's it. I'd be a little bit concerned on the long side for Baidu. It took out 174. I'd probably move away from trading it on the long side.
Yeah, I also looked like some analysts were battling it out in that stock. Morgan Stanley downgraded it from overweight to equal weight, and Stifel Nicholas upgraded it here. So you got a battle here of the in the ratings changes. So okay, we'll let you go and get ready for the open here. I just real quickly, kind of the same question. I know you touched on it before, but just like to reiterate it. What are the most common mistakes new traders make? And along those lines, what are some tips you have for new traders?
Sure. I mean, I think the most common mistake that I see with new traders is they don't actually have an understanding of what the essence of trading the markets is. They think it's really just a knowledge-based thing where they can look at a chart, and if it looks good, they can get long or they can get short. And it really is about developing skills over time. And the easiest thing I can tell you to do to learn more about what the skills are is just go to smbu.com/blog, because we create a ton of good content there every week, and we talk about the skills that we're working with traders on our desk, how they're developing those things. And treat it. The one other thing is you hear a lot, and the common thing I agree with is trading is a business, just like any other business. We have to develop a plan, and you have to have a process over time, which kind of coincides nicely with this idea of developing skills. But people who think it's about the next hot stock tip, and they see there's a triangle and it got above a line, and I'm getting long, and like those are the things that you'd like to avoid. And so if you're listening to this morning, please really try to take that to heart and come up with a measured plan with your approach to trading. Whether you want to be a professional trader full time, or it's just something that you want to do on a part-time basis, which also requires developing certain skills as well.
And finally, the S&Ps had that breakout above 1846.50, which was the high on December 31st. We sprinted another 10 handles, but boy, we're having a hard time holding those mid 1840s here. Do you think that that breakout was a fake out here, and we're going to trade lower back down to 1800, or the Momo guys are going to win out again, and it's up to the 1870, up to 1880 area?
I think it's a really close call. I don't think it's strong either way. I could definitely see us pulling back a little bit closer to the 181, 180, 182 area. They could also see us moving up to the on the sides up to 187. The one thing I will say is we are in a very strong bull market, and
Right.
regardless of what that pullback looks like, I think we'll continue to see higher levels before we have a more severe pullback in the market.
Okay, we've had Steve Spencer on, founding partner of SMB Capital, preaching good risk reward and learning the market. Steve, thanks a lot for coming on, and we hope you can find some time again to come on to the show.
Thanks for having me, Joe.
Okay. Another good trading lesson there, folks, from an experienced trader over there at SMB Capital. We are going to go over to Mighty Joe Young. Joe, you got 5 minutes for some headlines.
Oh, gee, thank you very much, Joel. I guess I will pick and choose then. But before that, let me forecast tomorrow's guest. We will have Joe Gitz of Social Market Analytics. He's one of the favorites, ladies and gentlemen. And we'll also have Mark Berman, editor-in-chief at TV Media Insights. Joel's really looking forward to that one, I can tell. So, that's what we've got tomorrow. Tune back in. Today's editorial headlines from around the globe. As part of revamped security following last year's deadly bombings, the Boston Marathon has banned various items for the 2014 race, including bags and strollers. The bombs placed in backpacks exploded near the finish line last year, killing 3 people. Backpacks, handbags, suitcases, and similar items are prohibited from entering any marathon venues this year. So are containers with more than 1 liter of liquid, costumes covering the face, and bulky clothes such as vests with pockets. Oh, it sounds like going to the airport now. Runners cannot take the items anywhere near the 26-mile course, organizer Boston Athletic Association said in a statement on Wednesday. Let's see, what else do we have here? Tesla Motors will spend as much as $5 billion on a new battery factory so it can make more affordable cars. Tesla said it plans $4 billion to $5 billion in total investment in the so-called Gigafactory by 2020 and will fund about $2 billion of that amount. The company is exploring locations in Texas, Nevada, Arizona, and New Mexico, according to a presentation on the website. The facility may employ about 6,500 people, the Palo Alto, California-based automaker said. While the Nexus 5 ships with Android KitKat, the phone's home screens and app drawer get their unique and refined designs from a custom launcher. If you're rocking a Nexus 4, Nexus 7, or a Google Play Edition HTC One, you can get your hands on that launcher too, straight from the Play Store. Dubbed the Google Now launcher, this home screen replacement gives you 2 useful Google Now-centric features. From your home screen, you can swipe right to bring up Google Now, where you can view your weather, sports scores, traffic, Benzinga Pro updates. No, not yet. And reminder cards and anything else you've added to Google Now. You can also say, "Okay, Google, show me Benzinga Pro," or Options House from your home screen to start a voice search without even touching your phone or tablet. Fiat is considering selling about 1.5 billion euros or 2.05 billion US dollars in mandatory convertible bonds to cut debt following its merger with Chrysler Group LLC, 2 people familiar with the matter said. The Italian car maker, which bought the remaining Chrysler stake last month, is talking to banks about issuing a bond that would convert into shares of Fiat Chrysler Automobiles, the company being formed by the combination, said the people, who has not to be identified, discussing private matters. The discussions are at a preliminary stage, with Fiat aiming to make a decision on whether to proceed in the first half, the people said. The car maker is also looking at other options to strengthen its balance sheet. Fiat declined to comment on the manufacturer's financing. Security concerns should not deter enterprises from using public cloud technologies when it makes business sense. A panel of practitioners said at the RSA Security Conference here this week agreed that if cloud providers are vetted properly, most enterprise workloads and data can be safely migrated to cloud environments. Any lingering questions by IT security pros about data security and privacy of cloud computing will be allayed as concerns about virtualization were in the past, they said. The horse is largely out of the barn, said John Pescatore, Director of Research at the SANS Institute. There's no debate about whether we are going to use the cloud. And let's see, today's trivia tidbit is Spike Lee went on a 7-minute profanity-laced tirade against the influx of white hipsters into the city's formerly poor neighborhoods during a Black History Month event on Tuesday. When an audience member of the Pratt Institute event asked the director about the benefits of gentrification, Lee joked, "Let me just kill you right now." Lee, wearing Defend Brooklyn hoodie, went on to denounce what he called the effing Christopher Columbus syndrome. You can't just come into the neighborhood and start bogarting and say, like, you're Columbus and kill off the Native Americans. He said the change in property values wasn't helping anyone and wondered why it took so long to get the neighborhoods fixed up. That wraps it up for today's headlines, just so we can beat the opening bell. Just a reminder, ladies and gentlemen, that the show would not be possible without our friends at Options House, who will give you 150 commission-free trades if you sign up for an account through this page. So there's buttons at the top, the bottom right. Click on through, open an Options House account, and get 150 commission-free trades just because you listened to Benzinga's pre-market prep. And I heard the bell ring.
Ding,
Brent,
ding, 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 ding.
where are you? Where are you, Brent?
Hey,
I think you heard the fake bell.
The fake bell.
The bell that throws you off. What? Did it? Oh, okay, my bad. We are open.
Well, I looked at
I stand
CNBC
corrected.
and they're clapping and everything, having their little
Celebrating.
celebration. Hey, we did it again.
Bogart.
We opened again.
Did you use the word Bogart?
I did bogarting. Yes,
You
that was
bogarted?
from
It's a
Spike
good one.
Lee's quote.
Bogart. You could also use it as a noun, like, man, you're a Bogart.
You mean like, hey, you're a real Humphrey Bogart?
No, a Bogart. Come on, it's like, someone's like kind of like, someone that like getting on your nerves or something. Hey, you're such a Bogart. You never heard that?
I don't know if I heard that one.
Yeah, well, you guys are kind of.
We weren't born when
Chubbs,
they,
have you heard of it?
I've heard of it. I've never actually had to use it before, though.
Yes, Chubbs has heard it.
Chubbs
He's from-
saving
That's
the
interesting.
day.
I mean,
Yeah.
Joel, I just figured it'd be like, hey, don't Bogart that joint.
Oh, I knew you were gonna say that, Joe.
Yeah, see, that's the reference that I know.
Oh,
That's
you
ex-
guys.
That's actually what I was thinking of. But anyways, let's move on here. I know-
How about the S&P futures? Ah, yeah, the market 1841. Last trade there, we did bounce off of the 1840 level. It looks like when that 830 data came out, we were trading under 1839. We had hit 1839 a couple times just before that data point, couple of data points, and then we had the 830 data, and we spiked up to about 1842.5. We are opening around 1841.
Okay, and I gave one level. What's the main level of the day?
The main level of the day, and if you look at the post-market and pre-market chart, it is pretty easy to see that level 1846. I'm looking at the chart. Let's see, going back about 9 p.m. all the way to about 4 a.m. this morning, it was just vacillating around that 1846 level, and we pushed below it. We bounced at
2, yeah.
1832.75 this morning. That was just before 6, and we have been on a steady climb ever since then.
Yeah, I don't know what spooked us to get down to that 1832.75 level, but to talk in the now here, the close right now, Brent, you got to concentrate on the close. 1842 even. We're just hanging here. I see a lot of red, not major red, but a lot of the Big Ten components here, big in the index, top 10 components in the S&P. I'm seeing some red here. I'm seeing the financials lag here. So I don't know. The only green I see here is a green apple that's trading up $1.53 here. But let's get into the lot of talk about where Joe buys most of his clothes here, J.C. Penney, and
I thought you were gonna say Abercrombie.
I thought you were gonna say J. Crew, the IPO, but
Oh, come on, chart. I want to see a better looking chart. That's the daily. I want to. Come on, this thing is freaking out here with all the quotes off the open here. Oh boy.
Wow, it's
That's-
going crazy right now.
Yeah, that's an eyesore here. But from a trading perspective here in JCP, okay, we hit a pre-market high of 763. But no, that's not the same here in the regular session. Opened up at 732, made a 740 high here. I think there's a lot of people looking to get out of this stock here. I mean, you were at $4.90 not too long ago here. So I think the longer it takes this puppy to get back up to that pre-market high, 763, I think the better chance you're going to float down maybe even get under $7 here.
Joel, and we did have our boy Brian Sazi commenting on.
Oh, what does Sotster
Yeah,
say?
I thought
Okay.
you were gonna want to know.
Oh, my lord.
He issued what he calls a flash note. That was shortly after the results came out. I think you're gonna like this comparison that he makes here. He compares the JCPenney quarter to, let me just read this. JCPenney's loss per share report attempts to lure you in like the smile of a cute puppy does from afar. He says digging right into the core of this report and its assorted commentary, like that aforementioned cute puppy, it could pee on you if not careful to move out of the way.
Okay.
So he's saying that there's kind of some luster to the quarter. He's saying that the street is probably, last night he said this, the street's probably going to bid the stock up. He's kind of warning you that there could be a sense of false security here in this report.
Yeah, well, the last few times it had this news, it popped up and then it opened up the regular session and then it just kind of puked here. But it is holding up here a little bit. Be anxious to see, if in fact it can get back up to that 740 level, if it can even get up near the pre-market high, 763. And Steve Spence also, noted the activity in the issue going back in the higher 760, 770 range from the back in early January. So, moving back over to the S&Ps here, have cleared the settlement. Back coming up to this number, 1846. Pre-market high, 1847. So we will keep an eye on that. Also, what happened? I don't think we got to cover ESI, educational stock.
Gotcha.
Getting schooled here. Let's take a look at the trading in ESI.
ESI getting a downgrade this morning. Bank of America Merrill Lynch downgrading from buy to neutral.
Oh, well, this stock is, yesterday it hit 36. I wish I could have told you about the double top at 35.88 to 36.06. Came hard off that level, and now we've gapped down here. I guess if you're looking for support in this or looking to cover short, just under the $29 level, you had a low at 28.93 on February 12th here. So, bad couple days for ESI. And then I was asking you about sympathy plays with that stock, and you told me, what, DeVry? DVY?
DeVry's a good one. Apollo Education is a good one. That one's APOL. There is COCO, COCO. There is also CECO. That is Career Education. Pretty diverse sector, and there's a lot of names in this group, and they all trade pretty closely together.
Yeah. If you were doing the old sympathy play here in the Apollo Education Group, opened up down a dime, missed the close. You wouldn't even have been selling into a gap situation there because 33.92 was yesterday's low, and you made a high at 33.95. JCPenney, the South Monster, exerting a little influence here. 722. We're going down. Who wants to buy this stock? Everyone wants to sell. It was at 490 a couple days ago. Let's see if the momentum can get going down on the downside here. You got to figure some shorts. People that shorted this thing early off the open going to be wanting to, hey, I'll throw it out at 701 or 7 even, something like that here. So,
Joel, I want you to take a look at the chart of eBay. We haven't been following this story too closely on the show, but a fluid story here between eBay and Carl Icahn. Carl Icahn a few days ago issuing an open letter on his shareholder Square Table website. Also issuing just a second ago, actually this is why I'm bringing it up, just at 9:35, Icahn issuing another letter to eBay shareholders, basically making his case for board members, his lack of, he doesn't like the board members, let's just say. And eBay coming back with a couple responses to Carl Icahn. It's been going back and forth, and the stock has been kind of steadily ticking higher as this has been playing out. Shares are up over almost, 10% in February.
New all-time high.
Ah, really?
Yep,
Okay.
yep,
Interesting.
Uncle Carl pushed it up here. The former all-time high, which had been struggling with, was 58.04. And look at this. We went to 58.09. Holy mackerel. Can you imagine that? Another nickel over the $58 level. Former all-time high 58.04. Carl pushed it to 58.09. We are now back under that $58 level. You Momo guys, you want to get back above 58, hold 58, and just keep going. But right now, just a new all-time high, and it wasn't by very much here. So good call on that one.
Wow, JCPenney shares are up 22% right now.
Yeah, and they were up more. I'm keeping an eye on that pre-market high. Another thing here, too, to keep an eye on, we've had about a 20-point break here, 22-cent break. If you take half of that is 11 intraday resistance coming in at 729, 730. If you're getting a little pop, a lot of people probably shorting that in the pre-market as well as off the opening bell up to that 740. So interesting move. Did the Sauce Monster make any comments on Sears Holdings?
I haven't seen anything yet. I'm sure he made his comments, but I haven't seen any note yet that stuff that I was reading off on JCPenney earlier that was an official note from Sazi. Not seeing anything official on Sears as of right now.
Okay, Sears.
Excuse me.
All right. Yeah, Sears Holdings.
Oh, okay, sorry.
Got above 44 in the pre-market trading, made a high just over 44 at 44.20. We had noticed the resistance that stock had also come up to 44 after making the low of the move, 44.01 on the 13th. The high so far in today's session, 44 sellers coming down, 43.79 high, 41 low. Wouldn't get too excited here if it gets back to the upper 43s. 44.01 looks to be a good level. Okay, let's just take a look at the Tesla Monster here. Did not quite get to its pre-market levels. Pre-market high way up there. Whoo-hoo. Boy, if you were selling right on that initial news, went to 267.75. Reversal of fortune here. Opened up 261.19, 61.49 high, and we quickly given back here. $8, 256.66, getting a pop here. So a little bit of the good news being sold in here too on Tesla, S&P futures bump up. Couldn't quite get to that 1846 level. But we've only got 4 minutes here now. And Jake, where you been?
I don't know. I mean, I was you guys were kind of on a roll there. I didn't want to interrupt. So
I know, but you always give us a good trade of the day. And now what are we gonna do?
Oh, man, I guess what was my good trade of the day yesterday? I don't even remember what turned out there. But this morning we got Groupon moving to the upside. Have you seen that?
No.
There wasn't really any real news. It seemed like he was just kind of picking up a relief rally. I mean, it held on to $8 yesterday, which I'm wondering if traders are thinking is kind of significant. Maybe they think it's hit a bottom or something like that. But I don't know if you're seeing anything on the chart here. But obviously the earnings report a couple days ago was not so hot. I mean, it lost $3, $4 off the share price, and now we're getting a little bit of a rally. I'm not saying it's anything crazy, but a little bit of a recovery in Groupon.
Yeah, I did notice it did hit to 767 at the day after the earnings, going to hold the $8 level. What I like of this, if you're on a series since making that 767 high, you've got, including today, 3 higher lows. 787, 815, 843. Also 3 higher highs here. I'm looking at this 850 level. 850 and 852 were the highs on Tuesday and Wednesday. We are trading at 858 here. I'd sure like to hear it hold this 850 level here and perhaps get a sprint up to 897. 897 was the high of the day. Well, actually, remember it got over $12?
Yeah.
When they the headlines.
I know.
They ran it up to 12.10, and then before you could even blink an eye, I think you caught a lot of other people, long on that. But like to see it hold 850 here. Chance for Groupon to get back up into the higher eights.
We also, another one that's moving to the upside right now, and the reason is 3D Systems.
Oh, yeah.
And what's interesting here is it hit a low of roughly $75 in right at the open, and now it's at 76.62 or something like that. So I mean, it's up a $1.60 since the open. I mean, it's really kind of rallying hard. It was showing a little weakness in the pre-market, nothing too crazy, but ever since it just rallying up. It's kind of pulling. What Solar City did the other day when They
Yeah.
dropped off in the post slash pre market, and then once the market opened, everyone just bought like no other and just took it right back above $80. What do you think of the 3D systems here?
Well, I wouldn't have been buying. I mean, 75.20 was the low. I really had nothing there. I would probably have been looking for it to get under 74. On the downside, you had three lows between 73.38 and 73.83. So I don't know. I wouldn't have had an inkling to purchase it up there. But coming back on the upside, folks, let's just keep an eye. 76.75 has been the high so far in today's session. 77.10 was the high from yesterday. So someone targeting that whole $77 level as a resistance point needs to get that to get back up then to the 4-day high of 78.65. So that's you coming right back down to settlement here in the S&Ps. Couldn't quite get back to that 1846. Really need this 1842 level here to hold on this slight decline.
Well, we are at 9:45. So, Joel, what are you thinking for the markets today? I mean, I know we've got the S&P in the red, Dow in the red, Nasdaq in the green. Hey, gold's back in the green, crude's in the green. Well, Euro US dollar is heading to the downside along with the 10-year. What are you thinking about today then?
Well, you said I just wanted to mention this crude is in the red now, and what happened to this thing? It's had all that resistance, double top at 102.80, 102.90, and it got above at 103. Everyone's like, okay, it's above 103. Let's get in. Va-voom. We are now back down at 102.07, down 52 cents. I don't know. I'm just going to let this shake out today between the close between 1842 and the high so far in the pre-market. I'd really like to see us get above 1847 and hold that for a 15-20 minute bracket here and get back into the 1850 handle. But that was our show for today, folks. Thanks for participating. Hope we answered all your questions. We'll be back with you tomorrow.